This book is one of the best books that I've read about day trading, and in this video I'm going to be talking about the 6 lessons that really stood out to me. So the first lesson that I learned was trade like a fisherman. Now there's a lot of quotes in this book that relates to this, and I've just picked a few that kind of really stuck out to me and that I've noted in here. But the first one is a story that he basically wrote. So basically, I'm going to be reading out these quotes. I'm not going to be, riffing, because I really want to capture what Mike is really kind of trying to portray in this book. He says, I changed the perception of the market from a battlefield into an ocean. I changed my self-image from a rookie soldier to a fisherman. To the fisherman, the ocean is a place he respects, but also a huge resource he can use. Certainly, he knows the ocean is dangerous, so he prepares each trip carefully, but he loves the ocean. He knows what to do when the storm comes. He knows what to do when the fish come. From then on, trading became an interesting, challenging, and fun game to me. Now, this actually meant so much for me because at the moment, with the markets changing, it's really hard to know what to do. It's really hard to know whether or not you need to stay out of the market. And this kind of made it very obvious to me, right? Because obviously with a fisherman, if it's stormy, they're probably not going to take the boat out. It's not clear weather. And it's just not a good opportunity for him to go fishing. But he knows when the fish will be there. And that's when he really works hard. That's when he really capitalizes on that. So that really stood out to me. So anytime where you feel like you're in the market when you shouldn't be, just think back to this quote, because I do now every day, and this has helped me a lot. So there's a few quotes that kind of relate back to this for me. And one of them was that we make a cash flow trade until KCG breaks. So one thing that kind of points out to me is that they trade differently based on the market conditions, right? And they use that to build cash flow. So he talks about obviously it breaking to the upside or the downside in a range, but until they do that, they still trade what they're seeing. They're not trading for what they're predicting is going to happen. They're trading the situation right in front of them. So if it is stuck in a range, they're only doing very short trades to build their cash flow for when that bigger breakout occurs. They've got a little bit more capital then to put towards it, which was really, really helpful to me as well. Now, the last one for this lesson would be that he talks about second entries a lot and how it can often be a better risk to reward opportunity, and to always take that second, opportunity or entry. There's a few things that I think about when I read this was that even pro traders get tapped out of a trade that they may be right on, but they just haven't quite got the entry, and that's okay. And that sometimes you do need to have multiple entries before the trade actually succeeds. And the reason why I put this in trade like a fisherman was because how many times have you put your line in the water and you haven't caught a fish on the first cast? You lose your bait, you recast it, and then you catch that fish, right? And that's why I put it in this section, because it's very important to know that you're not going to be right on every trade, but it doesn't mean that your thesis isn't right. It might mean that your entry is just a little bit off, and to not be scared to actually re-enter a second time. Now, keep in mind, he mentions he'll never try the third entry. And that's because by that time, if it's showed, that entry criteria for 2 times already and it's failed, the likelihood of the opportunity succeeding is a lot less at that point. But that's something to keep in mind. So for the second lesson, it's basically what makes a good trader isn't the trades that he takes, but the ones that he doesn't. This book countless times brings up how to avoid taking the losing trades, which has been incredibly helpful for me. I think one of my biggest issues is consistently losing or taking those trades that I should have just passed up on, and that's my win to loss ratio is not the best at the moment. And that's why anytime I've blown my account or lost all my capital, it was never like I lost it on one trade. It wasn't like I wasn't using risk management or putting my stop loss and using that. It was more so I was taking the trades that I just shouldn't have been taking because of the probability just wasn't there. But understanding how to pick up on those was really hard until I read this book. So this is one of the times he actually brought it up. So he says, when we consider technical analysis, we check long-term and short-term technical levels. With our long-term technicals, we want to find the next big technical resistance or support level for the stock we are trading. If a stock is near such level, this will affect your trading decision. For example, if we are considering but the stock is near a long-term important technical resistance level, we probably will pass up on this trade. That has helped me immensely, right? Stop expecting it to just break out. If that's there, pass up on that trade. Wait until price gets above that resistance level, wait for an opportunity to occur, and then take that long trade. Because the market may break through, but until it does break through, that's the time you should be taking the trade, not before and hoping and predicting that it will happen. So the last one that I want to read to you guys with this lesson would be this one here, where he goes, I avoided racking up gross losses by passing up on 50-50 trades, stocks that didn't move, weren't clean, or weren't clearly directional. This, I guess, just expands on what I was just saying, was that unless it's clear, don't trade it. And instead of thinking that you need to trade every single setup you see, take the ones that look perfect. Now, this takes time. Of course, you need a journal to work that out, and I'm still working on that. But this just really, I guess, validated that idea for me that I shouldn't be taking every setup, and just it allowed me to understand that I needed to focus on what each setup looks like and what ones look the best, what ones don't, and why. And I've been able to narrow my focus on that when I'm journaling, which is really cool. So this third lesson is probably a little bit different to what some of you guys have heard, but it's getting out of a trade doesn't necessarily mean having a stop loss. Now, this is a crazy idea, but essentially what I mean by this is just because you have a stop loss doesn't mean that you need to wait for price to hit that to get out of the trade if it goes against you. That stop loss is really there to protect you from, urgent market news that you haven't known yet, just like an impulsive move to the downside or upside against you. It's to protect you from that. But what you still need to do is be objective in your trades. And if a trade goes against you or price action is showing something that you weren't expecting or that doesn't fit into your setup, then you should simply exit the trade. Now, Umar Ashraf actually talks about this a lot, but he calls them scratch trades in some of his videos. And I've been really working on that. And I even praise myself in my journal when I've done that, because it takes a lot to be objective when you own that trade, right? Once you're in it, it's so hard to be objective because you want to be right. And so what I'm trying to do is basically when I am objective like that, I am basically giving myself a pat on the back and being like, good, this, rewarding that, because I need to be more objective in getting out of those trades, because that saves so much of my capital. And that's kind of where I'm failing. That's why my capital just leaks away rather than one big loss. It's because I'm not getting out of those losing trades earlier when it's obvious that it's not going to go to plan. So where Mike makes this obvious is he wrote, I do not know any great traders who do so by hanging on to trades that trade against them. Pain is for the hospital, not trading. In the portion of this book, he actually speaks about that there's a debate basically on Wall Street that, whether or not poker players make good traders. So he talks a little bit about that in this book. So that's why he references poker players in this particular quote, but it's still relevant to this lesson of learning when to get out of trades. So what he writes is, in trading and poker, often most important element is preserving your capital and living to fight another day. Just because there's a stop loss there doesn't mean that you shouldn't preserve that capital if you believe that price will go against you now that you have more information once you're in the trade, right? So remember that, guys, because I think that helped me a lot, and I've been narrowing down my skills when it comes to being more objective in those trades. So hopefully it helps you guys as well. So the last one for this lesson that I want to mention to you guys, it's quite short and sweet, but he makes sure that it stands out in the book, and he goes, when you are wrong, exit fast. Okay, so again, exit when it's going against you, not just when it hits your stop loss. All right, guys, so the fourth lesson is probably very similar to what you've actually heard on my channel if this isn't the first video of mine you've watched, which is that trading is an art. It's not just a skill. And my video about discretion and the missing piece that a lot of people don't understand with trading is the discretion or the art when it comes to trading, okay? It's not as straightforward. And Mike really makes this apparent in a lot of areas in this book. But one of the quotes that really points this out for me was, he says, if you think of trading as red light sell, green light buy, you should probably find another game to try or a book to read. Now, there's so many YouTube channels out there that go, oh, if this does this, buy, stop loss here, take profit there, and let it run. Like, if any of you think it's that simple and that like robotic, it's just simply not going to work. Like, you need to change your mindset. It's not that easy. It'll never be that straightforward. I know it can be so easy to like believe that because it makes you think that it's going to be nice and straightforward. And once you find this perfect setup that, you know, you'll be able to enter, put your stop loss there, have your entry, and you won't ever have to do much work or anything towards that. And this book really, really points out that that just simply isn't the case. And trading is a constant battle of learning and understanding and reading and comprehending what's in front of you, not only in the charts, but in the news, to have a directional bias and be a successful trader. And if this one-liner doesn't point that out to you guys, or you hear this and you still just totally avoid that fact, you're only cheating yourself out. Now, the second quote that came from this book with this lesson, if you guys don't know who Mike Bellafiore is, please look him up. He basically runs and owns a firm, so it's S&B Capital, and he teaches his traders and helps them through the process. And so just to kind of give you a bit of context behind this sentence, but he goes, I impress upon my traders to pay closest attention to whether they could have been bigger responsibly in a trade, specifically where and why. So not only does it just take you getting a good risk to reward trade to be a profitable trader, you need to understand where to put more risk on and where, and add to those winners. You need them to outbalance maybe your mistakes or just trades that you shouldn't have taken. You need those real big winners when you know it's gonna, you know, it's showing you that it's gonna be a good trade, knowing when to add and when to be bigger to help your P&L basically, and help buffer those trades that maybe were just a mistake. Because being a trader is being an athlete. You need to perform at the highest level, but to do that can be quite hard. Like, we're all human, we're always going to make mistakes. So being able to be bigger in those trades when they do go the right way, when it's advantageous to you, then that will give you the upper hand and hopefully give you the buffer you need for those mistakes that you do make along the way. Now, the last one that I want to mention in this lesson as well, basically just sums us up in a nice short sentence. And he basically states here that a great part of the process is to write down all characteristics of a familiar setup, brand these patterns in your brain, and then develop the intuition to trade them live. Now, just that end bit there, develop the intuition to trade this live, is huge, right? How many of you guys out there have backtested the setup over and over and over again, only to then go to live and it fail, right? It takes time to build that intuition. It may still be a profitable, strategy or setup, but you need to develop that intuition to be able to actually carry that out and execute that in the market. And that can be the hard thing. So I just want to let you guys know that don't get disheartened, and that it's an art. It takes time. You need to really develop it. It's not something that you're going to get overnight. All right, so this fifth lesson is probably a little bit more on that technical side for you guys out there, and it's expected value of a trade is crucial. One of the quotes that in this book that kind of really point that out is, he says, trading is a game of math. If the risk to reward is favorable, take the trade even if your downside is more than you usually allow, right? And what I want to point out is more so the first point of that sentence where he talks about risk to reward is favorable, right? You need the expected value to be X amount. So you need to look at resistance levels above you. Let's say if you're going long, if they're so close to you, so it's possible that price would hit that point and reject, the trade's probably not going to work. The probability of that trade isn't very good, right? So you need a clean highway is what a lot of traders say, where if you don't have any resistance levels above that point and you've got a long setup setting up, it's a high probability that you will succeed within that trade, or the expected value of that trade will be 2R or 3R where it's profitable, because there's no resistance in that level. So that's something to talk about, because I feel like a lot of YouTubers out there go, don't focus on what you're making and just always focus on your risk management, what you're losing, but you need to do both, right? I'm not saying what they're saying is incorrect. You do need to obviously have risk management, but what you need to do is you do need to know how much you're going to make, or the possible, profit within that trade, to really make that decision whether or not that trade is worth it. So another point that I want to make that really, helped me learn this lesson in this book was, first, you must answer what you expected out of the trade before you can determine whether you failed to hold, right? Because if it hit short-term resistance and you exited thinking, it's going to reverse, you probably did the right thing, right? As a trader, we're not here to just win or be right. We're here to make the right decision at the right time. And if price is reacting off a resistance level and you exit and it might have a small pullback but then continue in your direction, that doesn't mean that you didn't do the right thing just because it did still continue in your direction. You got out where you were meant to, right? You didn't know that it was just a pullback. There's no way of you knowing, okay? So this is really important to know. And this really, really helped me again, because it kind of brings back to jumping out of trades where they're going against you a lot quicker, instead of, just again holding or waiting for it to either hit your stop loss or you take profit. This really pointed that out as well, that sometimes you just need to get out of the trade, even if you are in profit, before it just hits your stop loss. So I really think that this is a very, beneficial lesson that all of us could learn. And I hope it helps you guys too. All right. Last but not least, actually relates back to my last video. I don't know if you guys haven't watched it. Basically, it was me just really struggling, right? Really going through a tough time with trading, not really knowing where I was with some things. And, if you guys out there are still struggling with trading, this lesson will be most important to you. And I think a lot of us will actually connect to it. I'll start off with the shorter version, shorter quote that relates to this lesson for me, which was, he said, "The trading coach in me knew that to sustain his motivation, I had to encourage effort and not result." Now, this again links back to where if I'm getting out of a trade objectively whilst I'm in the trade, and that was the right thing to do at that time, I make sure that I praise that when I'm journaling. I make sure I put that in the box where I go, yep, I did this right, because I need to make sure to sustain my motivation and to allow me to kind of enjoy the process more. I have to praise myself in ways, and the ways I'm putting in effort, right? And maybe I wasn't meant to jump out at that point, but it's good for you for trying to be objective within that trade, but you missed this part. At least I was starting to be a little bit more objective in that way. So that was a really cool, validation to hear that, to understand that sometimes you may be doing well, but the results don't show in your P&L, and you have to remind yourself that as a trader, because again, it's a probability game. You will go through losing streaks. Now, this last quote is probably one of my favorite, because it really, this one connects most with my last video. So anyone out there feeling that, there's been a huge response with that video, and I think all of you guys out there would love to hear it from basically a pro trader. He's not only a pro trader, he's actually taught other traders, and they've become profitable as well within his firm. So, look, I'll let his quote, or this portion of the book at least, speak for me here. And it says, "Before I share my response to him, I must add that I've had these same thoughts. I have had them every quarter that I have traded. I will have them again. Sometimes you feel like markets are too hard, that you just do not get it as a trader. And then there are streaks where you feel like you cannot do anything but be positive. The truth is those streaks end as well. You are not as bad as you think when you feel you cannot make money. You are not as good as you think when you believe you will never have another losing day. It's always going to be hard, Markets are always going to be changing, guys. And if you're in this expecting that you're going to become profitable and you're never going to look back and you won't have to put as much effort as you're putting in now, you should probably quit, because yes, it might become slightly easier because you know you're on the right track. But the thing is markets will change and you're always going to have to adapt, right? There's not going to be a time, or not even just that you're always going to have to adapt to the market, but you're always going to have those losing streaks where you're going to have to walk yourself through it, hold your hand and say, it's going to be okay. It's just a losing streak, and keep your mentality in check. And that's so important. And I felt like I really got burnt out before, where I just felt like I couldn't be positive, right? And yes, there's so many things in this book that I need to learn to do and need to implement within my trading, and hopefully those losing streaks won't be as much, or I won't trade away all my capital. But he also mentions somewhere else in this book, which I won't read this one out, but he talks about how most professional traders have about a 50-50 win to loss ratio, right? No one's got an 80% win to loss ratio. Like, no one is the perfect predictor of the market. It's about your risk and what your expected value is from each trade. So take what you will from this video. I can guarantee you there's probably 10 times the amount of information in this book. And look, if you found this video helpful or you felt connected to those last few quotes, watch this video here. I basically talk about my struggles at the moment and just how I've been feeling, and just a bit of real talk regarding trading. So you might like that video. Otherwise, I will see you in the next video.